Hello everyone, good morning and welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec. On Monday 3rd of June, we still have this negative sentiment running through markets. Look at equity markets, they are sharply lower again. We had Wall Street closing 1.3% lower on the S&P 500 on Friday and another 0.5% lower on the futures this morning. You can see that where the S&P 500 has now broken down below that 2785 level. That really does start to turn into more of a corrective outlook on the technicals and starts to look pretty negative, I think. And that head and shoulders top pattern, you can see that reflected across the likes of the DAX, the FTSE, the CAC, S&P 500, the Dow. All these markets seem to be topping out now, and it's some fairly significant downside breaks that we have seen. We can see the fact that volatility is moving higher. That is generally perceived to be negative for equities. And safe haven moves are really playing out. Look at the oil price. Similarly, look at that sharp move to the downside as these the move has come about really as the acceleration of the negative rhetoric around trade tariffs and the trade disputes that the US is sort of seemingly picking around the world is growing, and it sort of is a really significantly negative shift that we have got that's played out with regards to that. You've got bond yields which are falling sharply, accelerating lower. Now, the only thing I would say is that move on the 10-year has gone almost exponential in its acceleration lower in the past week or two, and certainly that would suggest very near-term negative outlook. But will that continue? You normally would get some sort of a recovery at some stage, and that's something that we need to keep an eye out on. But certainly at the moment, the negative sentiment is flooding through. Now that has hit the dollar to an extent. Certainly on Friday the dollar got hit, and today there's been a bit more of a mixed look to the dollar. But the yen is the big winner, and the Swissy at the moment. I'll take you to the yen a little bit later, the implications on the chart, but 108.20. It's a big move that we've seen in dollar yen to the downside. That yen is a key move there. Also, we've seen gold sharply higher. Thursday, Friday, really a strong move to the upside, and that strong move has continued today as risk aversion continues on these markets. So in terms of where we're looking at on data points today, well, we've got the PMIs throughout today. Now, the PMI data is interesting because we've had the Chinese data actually on the Caixin PMI, if I can find it, was slightly better than expected. There it is. Slightly better than expected, 50.2. So slightly better risk appetite was induced from that, but as equity markets have really slid, sort of not really managed to gain traction in that. The Eurozone data pretty much in line with the flash reading, that final reading of 47.7. But look at this UK number, 49.4. Big miss on the expectation of 52 figure. So really disappointing there. Not a great deal of reaction on sterling yet, but yeah, not a great number. ISM manufacturing this afternoon. Now, this will be interesting because if the ISM manufacturing, say for example, surprises to the upside, which if you look at the UK number, doesn't look all that encouraging, but if the ISM data encourages to the upside, then what would that do for the dollar? That would probably be dollar supportive and start to drive maybe a bit more of a move back into the dollar. So something to definitely watch out for there. Now, my chart today, Aussie yen. Now, the yen has been a key outperformer, and the Aussie is a key gauge of risk appetite because it's close ties to the Chinese economy, and subsequently we had a big move to the downside on Friday, breaking what I perceive to be a mini trading range, and that completion of a trading range actually measures around about one spot 10, one big figure 10 to the downside. So that gives you an implied target of 74.20. on that, having closed on a breakdown. But you look at the momentum indicators, which have deteriorated back on the RSI. Stochastics falling away. MACD lines rolling over. So closing move certainly looks as though that's a move to the downside, and you'd be looking at selling into strength now. You've got the resistance band 75.30, which is the breakdown support, to up to 75.45. So there's range of supports within the range, and that becomes overhead supply for a downside move. And you can see that on the hourly chart where we have those range of lows, overhead supply, selling into any sort of strength that you get now, negative configuration across the hourly momentum, and it certainly looks as though that there is further weakness to be seen in Aussie yen, and you'd expect that would be driven by the continuation of the negative sentiment on markets. And the key resistance is clearly now on a medium-term basis, that 76.40 reaction high from mid-May. So really is looking like further downside is likely on this chart. So with that in mind, I wish you good luck in your trading, and I'll speak to you later.